G'day everyone, welcome to the weekend update for the 1st of June. And US markets, European markets, UK markets continue to perform extremely well. Our market's doing okay, but it's really lagging significantly behind a lot of other places around the world. So the question is, now that the US has clearly broken out into a new all-time high and put in a really impressive week last week, just how far might this go? So let's have a look at that in this particular rundown of global action. So for American stocks, the S&P advanced from 1900 up to 1923 on the week and set yet another all-time closing high and has risen 8 of the last 10 sessions. So the momentum behind the buying in America really is quite strong. And almost all of those sessions closed on their highs, which indicates that the buying is strong all the way into the close of the market. We also saw the smaller end, the Russell 2000, start to rebound. The Nasdaq has certainly done that. It hasn't set a new all-time high, but is pretty close to it. So let's take a look at that particular action. We'll start with the S&P, and you can see over the last 8 to 10 sessions, very, very impressive. So again, whilst there were many people who were calling for a top in the US market, and certainly a lot of people who were following the adage of sell in May and go away, you can see that we had a dip in April, early April, didn't even get down to the 150-day moving average support. So clearly I wasn't concerned about any looming weakness until that line got broken. It didn't, and we've gone on. We've went into a consolidation period. We had a little peep over the 1900 level, pulled back for a couple of days, and then just shot off again. So we're in blue sky. It's really hard to project where this might go. The way that it's gone over the last 8 or 10 sessions, I believe that we could see a little bit of a pullback either from here or perhaps it might advance some more, and then we would get another leg up. I don't believe that this little run up here will be the peak. So I think we've still got a little way to go in America. It is a time of year when people are a little bit more nervous. It's also a time when summer holidays start in America, which tends to be a lower liquidity time of the year, and the market tends to be a bit more flat than anything else. So it's possible we could see some slightly higher to range trading, but my goodness, the momentum behind the American market really is impressive. So I wouldn't be surprised to see this have a crack at the 2000 mark over the next couple of months. Let's just have a look at the Nasdaq. You can see back to all-time highs now, so it's at a double top, but looking pretty good. This rebound over the last week has been impressive, and also the Nasdaq really failed to break below that 150-day moving support. It just tickled with it for a couple of days, but then went straight back up again. So pretty impressive on the Nasdaq. And let's look at the Russell 2000. So you can see it's well off its highs, but it appears to have stabilized around this, just around the 1100 point mark, and moved higher during the week. It just needs to get up above this level, above about 1154, and I believe we'll see the small caps move higher again. So impressive stuff in America. Let's just have a look at the German market, just to show you the comparisons. This is the German DAX. This is all-time highs, well above the 2007 peak. So it's a very similar pattern to America. And if we also look at the FTSE index in the UK, despite all their economic problems, they also are at all-time highs. Now this is a critical level. You can see we visited it here in 1999, again in 2007, and now this is the 4th or 5th time that it's had a crack at getting through this 6,900 level. I believe if it can clear that over the next week or so, then we might just see one really powerful move in the UK. But you compare that with the Australian index, and yes, there's been a bit of a trend upwards over the last year, But if we pan back, you can see how far below the all-time highs we are. We're still more than 1,000 points below the all-time highs. So our market definitely lagging. And this is really about a reassessment of China and what it means for our resource producers. That's really been the big drag on our market, plus the other issues that our economy has. So we're going okay in Australia, but you know, gee, really lagging significantly. So the Aussie did nothing on the week, finished flat, which is pretty disappointing when the rest of the world was moving ahead. And it's the same thing. It's concerns over China, about the steel industry and about their property market that's really providing a drag on our market. Also, the other thing at this time of year, which quite often happens, so this isn't a rare event, where liquidity dries up and market depth, particularly on anything below the top 100 stocks, just seems to disappear, and we get some very, very strange and volatile intraday moves on some of the smaller stocks. But this lack of liquidity and lack of momentum is really what's preventing our market moving ahead. So you've got to be a lot more careful in our market. Gold declined $42 on the week. So I spoke last week about the fact that we would get a volatility breakout. The price action had become so tight that it was inevitable. I expected that volatility breakout to go to the upside on balance. I acknowledged that it could go to the downside, and that's in fact where it went. So that breakout occurred, but encouragingly, there was a little bit of divergence with the GDX and GDXJ, which are the American gold mining indices, on Friday night. Despite the fact that gold went down about $12 on Friday night, the gold mining indexes, in other words, the share prices actually went up. And we need that kind of divergence for the market overall to head higher. The stocks will tend to lead the underlying metal in both directions. We also saw silver break to the downside as well, which is not a good sign, because it's now basically broken below its support, a major support, whereas gold really only broke a very narrow channel still within their phase one base. Copper was steady at $3.15, and crude oil also steady around $1.03. Let's just have a quick look at gold before we move on. So I'll just go to a cleaner chart. So this is the gold price. You can see we had a really tight price action. If I put some Bollinger Bands on that, you can see the Bollinger Bands had really become really quite tight and close together. The volatility breakout occurred on Tuesday, and you can see it's moved down sharply. Now it's still within this overall phase one base, so nothing has changed there. If you pan back and have a look, the price of gold could still drop down to the 1180 mark and then hopefully bounce from there. Silver, similarly, there was a really important support level here around the $18, $19 mark, and we certainly broke below that $19 level on Thursday. Not a good sign. But let's move to a slightly better sign, and that's the GDX indices. Now, you can see they're also in a big phase one base, just going sideways. Now it's only one session, so we need to see more data, but you can see the GDX indices had got down to oversold, and then we had really quite a strong reversal on Friday night, and it actually closed up higher. That's pretty encouraging. And it was even more apparent with the juniors index. It's the same overall pattern on the juniors. That chart is just is mucked up because they did an adjustment to the way the index is calculated. But we're in a phase one base, but you can see the juniors actually did really well on Friday night. So hopefully that's the kind of divergence we've been waiting for quite a number of months. There's the spot copper chart. Not a lot of change during the week. So just finally to summarize, global markets are in uptrend. The US, Japan, many stock markets in Europe, Spain, Portugal, all those real basket countries are moving higher. England, but our market is struggling, and it's about poor liquidity, and it's about concerns about China. So you need to stay focused on the assured growth sectors. Members know what those sectors are. I've been very loud and clear about those for a couple of years. So we'll stay very focused on those growth sectors. And the diversification of exposure is something that that not a lot of people necessarily readily warm to, but I think it's something that's really, really important to think about. If you would like some input and assistance in how to do that, then by all means get in touch with me. You'll find more information on what we do for non-members on our website, and there's my email address if anyone would like to contact me direct. That's it for this week. Cheers.